Hey there, speculators. It's Rod, your Futures Fanatic. Welcome back to the channel here on YouTube. Futures Fanatic is part of TDG. That's the Traders Dev Group, where we provide education for active futures traders and self-directed investors. Okay, the Fed Day Fun Day today, Wednesday, December 15th, and the Fed once again ate my cookies. So one of the things that I talk about here on the channel, it's not all that popular, is the importance of understanding your stats and journaling. And while I am profitable overall on Fed days, the swings are just getting a little bit too big. So I just was going to talk about that just briefly tonight. Before I go too much further, I want to remind everybody that this video is for educational purposes. You can pause it right here to read the risk disclosures and disclaimers. Don't eat yellow snow, look both ways before crossing the street. Okay, so essentially, this is what I wanted to do before I really get going. I said on Wednesday I would do these recaps of going through these prop programs. You can check this other video here. It's the last video that I posted. And essentially, I've made very little progress this week, and it was a decent give back today. Well, not too bad. So I've traded a few of the accounts, made some progress on this large account, no progress on the Top Step account, a little bit of progress on this Earn to Trade account. Did pass one of the $25,000 Lilo accounts, so that was good news. But disappointing, I was within about $20 of finishing this account off today, and as you can see, about an $844 drawdown, thanks to levels just not holding and really some poor trades late in the day. Once the move higher was pretty clear. So that's the word here. Got a couple quick questions about how I trade all of these various accounts. So I do have a multi-broker license on NinjaTrader. NinjaTrader allows you to connect, if you own a lifetime license, multi-broker lifetime license, you can connect to multiple back-end data connections. I'll do some other videos on that here on the channel. But it doesn't really help you out that much because most of these programs all use the same data connection, which is called Rhythmic. So essentially what I do is just trade one or two for a morning session, then I'll trade some in the afternoon. I also do have a replicator, and I'll put a link down below to the replicator that we're using in our trade group. It's one that was recommended actually by Apex Trader Funding. It works really great replicating across connections or across accounts that you have on the same Rhythmic connection. So if you understand all that, you'll get it. If not, don't worry too much about it. But essentially, I trade each account individually at different day parts because I am fortunate to be able to trade most of the day as a professional trader. So that's it there. Now, just coming back to the charts here. So the takeaway from this video will be very quick, which is that I know the stats now, and the swings are just too big for me on Fed days because essentially levels just don't hold. So this is the announcement candle, if you will, and this is when the press conference started. This is basically 2 p.m. Eastern Standard Time today, and then you can see this move here. So we moved essentially from 750 on the lows in the Nasdaq all the way up to we're trading 320s right now, but basically closed at about 300s, which was a key level that we'd had on our charts. Charts has been a pretty key level. So crashes up are in effect, and the unpredictability of the moves that can happen. Again, there was nothing to really call out where this price action came from, other than price action is random, and when these types of days happen, they don't really respect any kind of levels. So I ended up getting short right here, looking at basically Tuesday's lows. That didn't work. Then I sold prior sessions highs. Then I started to essentially just try to hedge it out. These were full contracts, but this is an example of one of my model portfolios here where just using micros, excuse me. So I'm short 3 at this point, and then finally I just decided to not pull the plug and finally just got long at 249 as a little bit of a hedge, but clearly it's not covering the entire kind of loss there. So really big move there on the Nasdaq, huge move here on the S&P as well. This is our 233 EMA. We'd like to see price respect this level. It did for this particular candle here. In fact, we got some decent shorts on here, but this one was just a rip your face off. Didn't respect the prior session's high at all, didn't care at all about that, and then went up to essentially the levels that we had back on Monday before we sort of fell apart. So just a crash up kind of day. So takeaway is that there are these Fed meetings on a monthly basis. There's non-farm payrolls. There is now some economic news like PPI and CPI that's causing a little bit of market volatility at known events. But this is the one known event that seems like it could create so much opportunity, and all it really does is create a lot of uncertainty and, as they would say in poker, variance. And I'm just tired of the variance. So I wrote in my journal very clearly today that on Fed days going forward, I'm going to stay extremely small for that entire session, like really small, or just not trade it. It sucks you in. You feel like, oh my goodness, if I can catch one of these big moves or the volatility around the number, it's just such a great opportunity, and it feels great when you're correct. But again, looking back at my stats, I do not have a positive expectancy overall in trying to trade my strategies into this type of volatility. I've done some videos on TradingView where I talked about trading Fed days and things like that, and I'm going to stick to the fact that you can rest orders way up at those levels. In fact, if I had rested my first short at prior session's high, at least I wouldn't. Now that we got to look on the NASDAQ, prior session's high on the NASDAQ was, yeah, right here, was at 132s. So at least that 132 would have been a much better level than being short down here around 16,000 initially, which was turned out, of course, to be a terrible level to be short from. All right, that'll be it. The Fed took my cookies, but we're big boys and girls here, so we take responsibility for it. And one of the best things you can do is understanding when market conditions or when particular events are not profitable and do not have the probabilities in your favor. And I'm going to now chalk up. It's painful for me to say this because I've had some huge days, huge days. But over here, I just took I don't know what it was. It was $9,000 or $10,000, $9,400, yeah, $10,000. And this is real money gone. So good news is crypto was up quite a bit, so it was still profitable on the day. But that's way too big of a swing for my type of trading style and for my pain tolerance and pain threshold. So that's wiped out. Still have a few micros on that we took a look at, I said here. And this is also over this very stupid position that I have on here. I'm going to lose a little sleep tonight. So lessons learned all along. Fed took my cookies. Keep my hands out of the cookie jar going forward. That'll be it for tonight. My name is Rod, the Futures Fanatic, reminding you to stay green, trade like you mean it. If you like this kind of content, or you'd like to learn more about these the futures markets, or have essentially stumbled upon this and have no idea what futures are, they are essentially the best instruments, in my humble opinion, for active day trading. If you want to learn how to read charts and day trade for daily income, you're going to want to take a look at the futures. So you know all the buttons to do. You can like the video, hit the bell notification, subscribe to the channel. You can always subscribe later if it turns out to be content you don't dig. That'll be it for tonight. Stay green, trade like you mean it. Thanks.